All right, everyone. Here we are with the S&P 500 index, ticker symbol SPX. And for those of you that just came across my channel for the first time, welcome to Invest for Tomorrow. And I'm doing a series called Stock Market Crash, Is It Coming? And honestly, thanks to the Feds, the stock market is being held up and it's projected to probably even hit all-time highs. Like, it's pretty impressive because if we go back over here, we're about to level off again to where it once was. It's really close and on its way to it. And the goal of the Feds, by pumping the stocks, they attract more investors and make more investors join in on these stocks. So what I'm doing here is I'm showing you guys through these circles, right? Um, how the bullish runs have actually continued. The only thing that I'm a little bit concerned about is this last circle here, because as you can see, this was steep slope upward trend, but from here on out, from this moment out, it's been kind of just stable. And here you could see bullish trend, bullish trend, bullish trend. But when you look at it overall, it's been in an upward direction. So I'm just here to tell you guys that the Feds are holding us up, and the way that this has happened is due to the Feds pumping the stock market. So how does this pump work? Well, there are repurchase agreements. It's called the repo market that we're in, and these repurchase agreements, what they're doing is giving out loans. And let's say a company takes a loan of $100 million, and they pay back interest of $100,000. When you divide, you know, 1% of 100 million, which 1% of 100 million is 1 million, and you divide that into what 100,000 is, which is 10, a division of 10. If 1% is divided by 10, it's actually 0.001. That's what these companies are paying back in interest. So they're paying back 1/10 of a percent in interest. I mean, that is some ridiculous numbers where these companies can go ahead and take advantage, right, of all this repo market and opportunities here. I mean, that's phenomenal for them, and it's what's allowing everything to stay afloat. So the first thing I want to do is show you guys the dates. The previous dates were the 14th, 21st, 28th, and the next one is on the 4th. I'm going to get back to that in just a second, but here is the 13th, right? It was this drop, and then the next day was the 14th and it rose. So that's the effect of the pump, right? And it leveled off. The next following days, obviously, it took a couple days for the anticipation. Investors were motivated, right? They were getting motivated before that, and they started loading up on stocks. And here is the 20th, and the 21st was the next day. So it jumped from 32.47 all the way up to 32.77. So these pumps do have an effect in total of of the stock market. And the reason why I like using the S&P 500 is because it shows the 500 largest companies of America. The blue chip stocks are usually in this sector, and these are the companies that are benefiting from these pumps. So it has to be an American company. So don't just go and pick any stock in the market and just say, oh, okay, I'm going to pick that stock because I feel bullish about it. No, if you feel encouraged to and you feel inclined to jump in on this opportunity, which is obvious how it's been from the 13th to the 14th and from the 20th to the 21st. If this jumped up by 30 points, right? Or even here, jumped from 31.28 to 32.38, that's almost a 100 jump, right? $100 jump here. And here was like a $20 jump. Um, the point of the matter is that these stocks that are involved in the S&P 500 are going up between 30 cents to even $2. So depending on the ones that you choose and the ones you feel more inclined to, make sure that earnings isn't coming out if their earnings are bad, or make sure if their earnings is coming out that their earnings are good. Maybe you can feel inclined to do that. So I'm here to encourage you guys to do your own due diligence and take advantage of these opportunities that these companies are taking advantage of towards their stock market share prices and their whole entire market capitalization of their company. And then us as shareholders, we can get a piece of that by being part of the company within those dates, right? And then obviously you decide if you want to hold or sell. So I hope that this information, as I continue, is informative and helpful to you all. Then it leveled off after the 21st. It leveled off and it even fell. There was some sell off, maybe puts, expiration dates were coming, and so forth. And from that day forward, from the 21st all the way until the next pump, right? It took until the 28th. The 28th, what it did was kind of level off. This was probably one of the weakest pumps I've seen recently. I'm not sure what type of news came out and so forth that hindered this from, you know, reaching new highs. But if you zoom in on the 28th, the lowest it was 3,220, and the highest it went was 3,245. So that's still a 20-point jump on another stock that could have been a 30 to 50 cent jump. So keep that in mind as well. I mean, even though there was slight jumps, it's always going up. And then it hit a bottom of obviously 32.15, but the next day you could see the catalyst of these stocks being taken advantage of the price, and they rose from there to 32.67, from 32.15 to 32.67. So something that I learned in on within this pump is that not always on the date of the pump, right, from 13th to the 14th, which was the first one, will it rise. Not always will it do from the 20th to the 21st, that big steep rise. It might take the next day. Another thing too, the anticipation, right, has a lot to do with the stock on the next day because it compounds. And the anticipation was very leveled out on the 27th, just hanging in there. And the 28th just was hanging in there. And if you go back and see, the 28th was the date of the pump. And really, it was just hanging in there. But if you look at the anticipation the days before these other pumps, right? This one had anticipation from the 16th all the way to the 20th, and people just were really encouraged. Investors were feeling very bullish coming in, and it brought it up. And this one, the anticipation was there, and what this pump literally did was level this stock off, right? Level off the index, stopping it from going to newer lows. Honestly, that's what this pump did. It saved the market in that time. And then as soon as people saw it going slightly green, which you could see here, you pay close attention to what happened here, right? Excuse me for this delay here on how slow this is. Um, it slightly went up, and then look at this little bearish mark right here. It was slightly falling again, and all the investors that saw this slight jump from down here to here said, "Oh no," and they brought this one up in an upward direction. Obviously not up here, but up in this direction, and then it leveled off. So something that I've learned is always pay close attention to um, the anticipation the days before, and even if it falls, the pump usually levels it out, and that's what the goal of these pumps are, to level out the market if it falls and maintain it in an upward direction, which is what it's doing. If you look from this point to this point, that's an upward direction. If you look from this point to this point, that was an upward direction. It slightly fell. News, puts expirations, fear, people selling off, taking profits, brought this back down. The anticipation for the 28th wasn't as strong, but then the next following days it started to raise again. So for the most part, these pumps, they actually show us, right, that they do bring up the market, they do encourage investors, and they do create anticipation. And this is what I want us to see right now. The anticipation that investors are having for the next following pump. Obviously, this ended the market with a bullish run. The question here is, since our next pump is on the 4th, right? Tomorrow is the 3rd. And I just wanted to show you guys the effects of the 14th, the 21st, the 28th, a little background on how this has been going on these last couple of weeks. And from the start, like, you guys saw how this is just super bullish from the beginning when you go all the way back, right? All the way back to the beginning of the pandemic fall of the coronavirus and the market crash, all the way to where we're at now. So that's just something to keep in mind, that this has been bullish and it may continue to be bullish. But tomorrow, the 3rd, is important. Two things can happen. The anticipation can continue to skyrocket, right? And level off. And the date of the pump, either it's going to continue to rise or it might have a slight sell off. And instead of falling steeply, right, it's just going to level off and stay above. But when you do the analysis from Friday to the date of the pump and what happened Monday, it's at a newer high from where it previously was. So it just continues that upward trend. Now, if it doesn't do the level off and it continues upward, then there's newer highs being hit and it's an upward direction. And there was an opportunity to get on in here if you didn't get in on Monday, at least early Tuesday morning, hang on tight, and then some profits. And if you get in early Monday, there's a jump there. I'm not saying and predicting that it's going to be up to this direction. I'm just giving you guys a point of reference so you guys can see the possibilities. That's something to pay close attention to if Monday it continues to be bullish. Now, if Monday bullish and then all of a sudden it falls and it levels out here, this is what the pump most likely will do. Slightly come back up and level off slightly or miss it by a little bit, or it'll fall down and it'll hit new highs, leveling off with the high and passing it just a bit of where it hit earlier in the day before it fell. If there's a fall, there's always an opportunity to get in on certain points, right? Or even get in early in the day. And when you break it even, right, you look through it, there's this window of difference, either from here to here or from literally this line to here. So always good opportunities to enter and pay close attention to. The dates of the pumps, I'm not here to guarantee that it's going to be green and that you're going to make profits and that the stock that you choose is going to go up. I'm not here to tell you that. But overall, on the dates of the pump, as we can see previously, and even the day after the pump, the market tends to stay green. And like I said, most stocks go up between 30 cents to $2. There's some that do bigger jumps, but for the most part, that's the area and window of profits that could be made per share. Now, Monday, like I said, is going to be interesting. If the bullish run does continue, I mean, this is just going to go in an upward direction due to the fact that the pump will help out wherever this ends up. If it ends up here, right, let's just say it goes up to there, the pump will just bring it up to newer highs. Now, like I said, Monday's going to be important. I pay close attention to how Monday reacts. If this falls anywhere to like back to these lows here where it was, most likely the pump, what it's going to be able to do is just bring it slightly back up to stop it from falling in this direction, or it could bring it back up to the point where it actually levels off or surpasses where it was before. So pumps are there to always maintain the market from falling hard or harder than it could, right? Due to the times that we're in, and also to continue keeping this bullish run from happening and from stopping, actually, not from happening. Continue it from stopping so that it continues to happen. Because when you zoom out on the bigger picture, I mean, you could just see this is all in an upward direction. And if you just keep going down and down and down, you'll get down to the point where this all started, and you can see how steep these charts are showing these numbers, right? If you really break it down and make it look longer than it should, it really shows you how steep and upward direction this has been going. Obviously, in between it all, there's ups and downs, and that's what we're seeing here. There's ups and downs, downs, ups, downs, ups, downs, up. And really what's going to determine how much more bullish this could be is how Monday plays out. Because Monday could bring this down and turn out to make the pump just something that's going to make it stay afloat. And then from there, the dates after the pump, such as Wednesday, Thursday, Friday, will have to have great earnings, good news for a bullish run to continue. Usually that's what the pump does too. As we saw here, this pump brought it back up, it leveled out, it almost looked like it was falling, and then from there on out, people knew that the next pump was coming, and towards the end of the week, great news and good earnings probably came out, and the market continued this direction, right? So those are some key things to pay close attention to. I hope you guys found this informative, and honestly, I believe that if this can continue a bullish run, that pump is going to be significant. It's going to be very significant because this week has a lot of great major companies that are probably going to have good earnings, which is going to have a good effect overall in the market, especially if they're S&P 500 companies. So do your due diligence, do your own research. I'm not here to tell you to buy or sell, but definitely look into it. I don't want you guys to miss out. And if you've already been watching my videos and you weren't ready to buy, such as in the 14th or on the 21st or on the 28th, I highly encourage you to go ahead and step out of your comfort zone. Do your research. Again, do your due diligence. I'm not here to tell you to buy or sell, but check it out and don't miss out on the ride. If you've been watching how it reacts before, I don't want you guys to miss out on opportunities that are literally there, and as investors, we shouldn't take for granted. This is the most transparent that we'll know when things are going up, especially due to these pumps, whether it's 2 cents, 3 cents, or $1 that each share goes up by. At least we know that there's something to guide ourselves through to know when it's going to go up and how it's going to go up and why it's going up. So that is awesome for us investors. Everybody that's been watching and has not subscribed already, I highly encourage you to. I will be posting weekly videos in regards to this, and I post daily videos. And for all my subscribers, I want to say thank you for your guys' support, your guys' comments down below. I would love to see you guys all engage in conversations down below on what you think and how you feel about the market overall and stocks. And don't forget to hit the like button so that more people can be exposed to this video, because the more you guys like it and the more you guys click that button, the more people will see this video, because I start to pop up on people's suggestions. And share this with your friends and community so they can all benefit from this as well. And at the end of this video, there's going to be a pop-up of Clorox. Hit it. I highly encourage you guys to watch it because their earnings is tomorrow. And who has not bought Clorox? That's the question, right? Almost everybody has. And if you haven't already, you're going to be buying it at some point. That's one of the most reliable disinfectants everybody uses. And their earnings should be phenomenal. And that means that there's some money to be made on those charts. So check it out. Let's make some money. And thank you for watching.